G'day all, Ben Rees West. Going to look at gold in this video for this week, see what we can see. So let's just jump into the chart here and we'll just start off with the US dollar. Now, the US dollar, or the dollar index itself, it's gone a little bit in my face from what I was talking about last week, where I was looking for weakness. I still think that'll come, but obviously the time is not right. So this downtrend we were tracking is done now. That's all over. And this looks like it's bottomed out into a nice pivot where it's once again held its retracement zone, and away we push. So a couple of factors here. Obviously, because this is the proxy. You've got the combination of a BOJ sitting there doing nothing, and the yen is weakening against the US dollar. Plus, you've got the instability of the French elections weighing on the euro. They're the two biggest components against the dollar index. It's pushing away. Now, that, of course, I think I've said this before, just because the US dollar or the dollar index is going up doesn't mean that gold and silver are going down. It just helps gold and silver to go up when the US dollar is going down. However, we've got this case now where gold and silver have had a nice rise today, even though the US dollar has gotten stronger. So you've got that combination of the Fed, the BOJ, the Fed talking a little bit more hawkishly than the market expected, the BOJ and Europe, and that has put a little bit of a rocket under this. So I won't really, I'll just have a very quick look at it, because I only want to brush over this briefly because it's not helping us this week. So all I'd quickly say about this is, keeping in mind we've got this, we sort of had this range that we held. Maybe you can just even encapsulate that, because maybe. But of course, you've got this plummet on the CPI number, I think it was, or just before, and then of course we rocketed out of there for various reasons, as just discussed. So this looks like now an attempt to break out of the range. So we'll have to see if this retests these tops and goes on. But at this stage, you would say it would. You're just looking for the retracement plays here. I mean, the first one that came up here, I wouldn't play retracements during major economic releases. I would have been trying to sell this bounce, so I would have got stopped out on that. But now it's just trending the other way. So now you're just looking for the retrace that way, which you may not even get. The point being here is this looks like it's going to be strong in the short term now. But we will see, of course. Everything can change in a heartbeat. If we take it that way, we've sort of gotten through the retracement on the other side. So we just need to probably beat this top here, and then maybe we're in the position to come ahead and challenge up here. But like I said, I'm still looking overall for chances to sell this thing. I don't particularly want to be long the US dollar, because those cuts will come. But I think I've suggested they're not going to come in the time frame that the market wants them, and that is just proven when the Fed tells them that, and they've got to then scramble. So look, I won't talk anymore about the US dollar. I think that's all we need to say. It's going up, but gold and silver are going up too. So it's one of those things where it's not helpful this week. So let's go and have a look at gold. So this is where we were last week, and so far, this was the play. So we had this support down here, which is tested. Now it's just an interesting juncture here, right? Because we've got this test back up into the retracement zone of this swing, and now we're trying again. So at the moment, this still to me looks like a sell coming down to here. I would still be a seller in this zone, looking for at least this, if not possibly that. Okay, that is still the measured move play that's on the table. I don't think anything's particularly changed, even though we have a small short-term trend change here. Okay, so if you wanted to be a little bit more cautious about this, well, if you really want to set yourself up properly, I would suggest you look at it in this way, okay? Because this looks like the three. We haven't even actually effectively taken this top out yet, but this looks like potentially the three-wave retracement swing, which, yes, it is a new trend. I suppose you could put it that way. You could look at it that way. But the one, what I'm saying here is the one-to-one move. Okay, so the AB equals CD, AB equals CD takes us right to the 61.8% retracement of this swing. Okay, so you can see how that goes together. And this is a very technical market. Okay, so that looks like a pretty good opportunity to me. And if you do that, then you can structure the trade with correct position sizing and risk reward ratios to not guarantee yourself a trade, but to give yourself the best chance of a trade. Okay, so if you did that, if you just stopped out above the 78.6, say for example, that's still giving you 5-1 down to the measured move target. And just because it's a measured move trade, you might say, well, I'll take that. 3.7 still all right. Maybe you won't even want to put your stop above that. That's still 1.65. It's not quite as good, but you're giving yourself a chance. So there's a lot of ways you could play this. It's up to you as to how you structure your risk rewards and where you place your stops. I mean, yeah, you could put a stop there, but I would suggest look, I'm not suggesting because I'm not offering any advice, but to me, I would think that if the market got even close enough to here, if it even got to there, it's going to more than likely get through that. So you either stop above that before it, or you stop above it. But stopping above it, there's probably going to be a lot of stops up there. That just tends to be how the market works. But I'm not going to talk about how you manage a trade. I'm just talking about this, for me at least, looks like a good entry because there's a bit of confluence there. So that's where I would sit with gold. After that, I mean, that US dollar, you could make an argument that it is still strong. So this could be presenting us with a little bit of a gift to come back down here, a bit more of a gift entry. So this looks like the zone for me between 23.30 and 23.50, or 23.37, 23.50. You get the point. Look, the thing is, if you wait up here sort of around this 23.50, the market just may not get there because it might just get into the zone again like that, and then this comes to fruition. So you've just got to decide how you could do it, but you can see how that technically comes together. Okay, that it just comes up here. It can tag this. If that pans out that way, well, that would be beautiful. And the one thing about the gold market is that it tends to play these technical games pretty well. So that is what I'm looking for gold this week. So look, there's probably not much else to say. I think that's the trade that's on the board. That's how I'm looking at it. So thanks very much for watching. Don't forget to hit like and subscribe. See you in the next one. Bye for now.